Hello everyone, I am Prasadika Harshani from Sri Lanka Institute of Advanced Technological Education. My registration number is number 30. I am fellow in Higher National Diploma in Accountancy part-time. Today I am going to present a ratio analysis of Acess Engineering PLC, which is one of the leading construction and infrastructure companies in Sri Lanka. I analyzed 2024-25 financial statements for this presentation. First, let's see about the company. Acess Engineering PLC was incorporated as a public limited company in 2001. The company mainly operates in civil engineering and infrastructure development, including roads, bridges, ports, and buildings. Over time, the company has diversified into several sectors such as energy, automobiles, property development, and healthcare. The company's main shareholder structure is through its group and subsidiaries, such as Acess Motors plc. The chairman is Mr. Sumal Pereira, and the managing director is Mr. Rohana Fernando. For this analysis, I have used the 2024-25 annual report of Acess Engineering plc. Now let's look at the latest financial performance of Acess Engineering plc. Total revenue is rupees 34,511 million. Earning before income tax is rupees 9,610 million. Profit after tax is rupees 6,291 million. Total assets are rupees 109,979 million. Taxation is rupees 1,492 million, and the company has around 1,574 employees. These figures shows that the company has a strong financial size and the growth. Now I will move on to the ratio analysis. I will compare 2024-25 annual report financial figures with 2023-24 annual report financial figures. Firstly, see about the profitability ratios. Under this, I discussed the net profit margin and the return on equity. The net profit margin decreased from 32% in 2024 to 18% in 2025. This shows that the company's profitability has reduced, possibly due to higher cost. The return on equity also decreased from 17.92% to 14.73%. This indicates lower returns to shareholders compared to the previous year. Overall, profitability has declined even though revenue has increased. Next, see about the liquidity ratios. Under this, I discuss current ratio and the quick ratio. The current ratio improved slightly from 1.12 to 1.16. This means the company can meet short-term obligations slightly better. However, the quick ratio decreased from 0.61 to 0.58, which shows weak immediate liquidity since it excludes inventory. So liquidity is still not very strong. Now see about the efficiency ratios. I discussed asset turnover ratio and gross profit margin under this. The asset turnover ratio increased from 0.22 to 0.31, which means the company is using its asset more efficiently to generate revenue. The gross the gross the gross profit margin remained stable at around 34%, indicating consistent cost control at the production level. Overall, efficiency has improved. Now see about the solvency ratios. Under this, I discuss debt to equity ratio and the interest coverage ratios. The debt to equity ratio increased from 55.59% to 62.84%, which indicates higher reliance on debt and increased financial risk. However, the interest coverage ratio improved from 2.67 to 5.02 times, which means the company is now better able to pay its interest expense. So even though debt increased, repayment ability improved. Finally, see about the investor valuation ratios. Under this, I discuss earning per share and the price earning ratio. The earning per share decreased slightly from 6.86 to 6.31, showing a small decline in earnings available to shareholders. The price earning ratio decreased from 14.68 to 8.47, which may indicates that the company shares are undervalued or that investor expectations have reduced. Now see about the recommendations based on the analysis of Access Engineering PLC annual report figures. First, let's see about how profitability improve. To improve profitability, the company should strengthen its cost control systems to manage rising materials and construction cost. Focus more on high margin infrastructure and specialized engineering projects. Improve pricing strategies in contracts to protect profit margins. And then see about the how liquidity improve. To improve liquidity, the company should maintain a higher level of cash and cash equivalent. It should also improve the receivables collection period by ensuring faster collection from customers, reducing reliance on short-term borrowings will further improve cash flow and financial stability. Let's see about the how efficiency improve. The company should enhance project management efficiency to ensure timely completion of projects. It should also improve asset utilization, especially machinery and equipment. Investing in employees' training and productivity improvements will help achieve better operational performance. Now see about the solvency improvements. To strengthen solvency, the company should gradually reduce its dependence on debt financing, maintaining an optimal debt to equity. Optimal debt to equity balance will reduce financial risk and improve long-term stability. Now finally see about how investor value improve. The company should maintain a stable dividend policy and focus on consistent earning growth. Improving transparency and communication with investors will also increase investor confidence. Now, finally, see about the conclusion. In conclusion, Access Engineering PLC is clearly a growing and diversified company. But there are some concerns. Their profitability has declined and the liquidity needs improvements. At the same time, efficiency is improving, and financial strength remains stable. Overall, the company is strong but needs better cost and financial management. Thank you for watching.